Welcome back to Bloomberg. Crude oil prices are trading down from that 7-week high following the tumble in U.S. personal incomes during the month of June. So we're going to take a further look at just what the oil price trade is going to be with energy trader Ira Eckstein of Ira International Trading. He's down at the NYMEX in the pits. Ira, when you get numbers like we did today with personal income, and then you look forward towards the Energy Department numbers we're expected to be getting tomorrow, how do you position yourself in this trade?
Well, let's just take a step back here, right? Crude oil is resilient. We're down to that $70 range, and we're right back up to unchanged. So crude oil has really bounced back. We're trading at almost $71.50 right now. Well, it's definitely driven by financials. We had a big build last week, which pushed us to the $63 level. If we get some surprise draws tomorrow, we could be at $75 pretty quickly.
That 5 million barrel build that we saw last week seemingly took the pits by surprise. There was a very sharp reaction.
But obviously we didn't stay down there.
Right.
That was correct. So we had rallies in gold and other equities and all the commodities. You got China, big buyer. Don't forget OPEC took 4.5 million barrels off the market pretty recently, and that's not coming on so quick. So, if we get any kind of financial, any kind of economic rebound, oil is going to fly.
Well, how much of a factor is the U.S. dollar trade in this? And looking at the jobs picture, we're going to get that all-important jobs number this Friday. What are you primarily focused on? Because we're getting indicators all around, some of them having mixed messages. What's the key thing to focus on? Dollar's
going to have a huge impact. It's quoted in dollars. That's why we ran up last summer to $145. Mm-hmm. So that's currently, but you have to look at, as the economies pick up worldwide, that's going to be a big demand in oil. Look at China. They were the ones pushing it up the last couple of years. If their economy picks up, if our economy picks up, oil, has to go to $80, $85 pretty quickly. But, it's still going to take some time.
Well, seemingly everyone is making every argument you possibly could, either making a fundamental argument, talking about, refineries reducing. They're also talking about, China, the rebound there, more demand for oil. But then we're also hearing, oh, it's a paper trade, not a product trade when you look at the U.S. dollar. Which of the three is it, Ira?
All right. Let's look at fundamentally. Plenty of crude oil still here. You can't argue with fundamentals. Let's look at technical. Crude oil is a technical market. It held all the technical levels on the way up. I think that, oil is going to be ahead of the economy a little bit. If they see or if we feel that, the economy is going to pick up, they're going to take oil up before the economy probably.
What's your position before tomorrow's Energy Department numbers?
Position? I'm a flat guy, you want to gamble, you want to buy dips. The dips already happened. If you're not in it already, you may have to, wait and see a little bit. I really don't have that position, right now. If you're not in it, I wouldn't get in it right now.
All right. Thank you so much, Ira Eckstein,
you're welcome.
Energy trader for Ira International Trading.